Hello, everybody. Let's have a quick look at Apple. I know we looked at it some time ago, and we called the downside move there, which was pretty good. But the question is there more downside to come? So I just want to point out a pattern here on the weekly that is developed, and pretty much a consolidation pattern before a breakout, which is called a diamond. So just give me a sec to get these lines in. Right. Now you can see we have a diamond here. Now, for me, if we look at the weekly, we've got this divergence. Okay. So price has been moving to the upside, but the awesome oscillator here has been moving to the downside. And that is very typical of a top that has happened. Now, the diamond is the consolidation of this phase, but if we have a look at what is gone on the last week, so week before last, we closed right here on the blue line of the alligator. Now, the Bill Williams alligator, when we're running like this, green, red, blue, okay, we are moving to the upside. Now, what you need to understand about the alligator is it is essentially three moving averages. So the one is a 13, 5, and an 8. So your 13 is the long-term moving average, and it's a smooth moving average, okay? And then your midterm is the 8 moving average, okay? So essentially, when they are running like this, we are in an uptrend, and you can see how it functions, and you'll see it close on the daily now as well. But when we start going sideways like this, we are ranging. So you can see this consolidation pattern is pretty much in play. So we could move to the upside here and down. We're looking for a break of either side of this triangle. Okay. So let's just get to the daily. Now, I just want to delete some of the noise. Now you can almost see that this upward trend line here, we're almost equidistant from it. So we're kind of forming a bit of a range here. And on the daily, you can see how we broke through quite violently. We are finding some support here, because we can't really call it support at this stage because we've broken through, but there is some action happening at the 200-day EMA, which is this level here, this dotted purple line. The Bollinger is also giving you an indication here that there may be a reversal happening. Now be careful when I say reversal, because the reversal could be very short-lived, and I'll show you why. The first clue here is that we've broken this level. Okay, so we've broken through this last swing low. So although we do have a reversal pattern brewing, the confirmation that you're looking for of a reversal is a break above that blue line. So this swing high here, this pin bar, that is what you're looking for. You need a daily close basically above that to indicate that this here is a Bollinger double bottom. Okay, now if you watch my Bollinger video, you'll understand that there is always a chance that this happens like this, comes down, comes back up to test this 200 moving average before moving back down for the third push down. And you do have some pretty intense targets at the bottom here. So you have this tail here, okay? You have the bottom here as well. So you have quite a zone, because you've got a gap here as well. So you've got quite a big area here that it could target. And I think let's just do it this way. So it's from there to there. So basically what I'm saying is from this close to, or this open, sorry, the bottom of the screen candle to this open. So there's a gap here, and that is an area where it can be targeted. But this long pin bar here will definitely be challenged somewhere along the line. Now, if we break to the downside, that breaks this consolidation pattern to the downside. And that basically gives us a very, very broad target. Let's get that. So if we do break, say here, we are looking at 132 area, 132.35, and I don't see anything there where we can find support. So I would assume that we would find support somewhere in this area. So that whole target may not get reached. We may just head up to this level here, which is 142.20. Okay, so this is kind of a little bit concerning if you're holding the stock as an investor right now, because these patterns can go either way. So this could just be a consolidation of the bigger move up. So I think let me just get to the weekly and you'll see what I mean. So this longer move up, this could just be the consolidation, and where it just narrows until it breaks up and continues on its upward journey, or it just says enough and it comes back down. Okay, so I think for me on Apple, it's not a stock that I'd be looking to hold long term just yet. I'm going to need some more confirmation before I do. So, so for next week, what are we expecting? Let's get back to the 4 hour. So there is a nice double bottom brewing here. There's no doubt about it. So it's on the daily and the 4 hour. You can see how prices gradually moved inside the Bollinger Band from outside, slightly outside, inside. So there is a nice Bollinger W bottom. So it's called a W pattern or a double bottom, but essentially it's a reversal pattern. Now, your reversal could be short-lived. It could just come and test this previous high. It could come back to the 200 moving average on the daily, which is here. Okay. Or alternatively, it could play out. And if it does play out, what you're looking for, so let's just do that. That is your double bottom pattern. Okay. Which basically means if you break to the upside, you can expect us to target this area. Now, look how nicely this lines up. It lines up with the 200 4-hour moving average. It lines up with the previous swing high, which is there. That's that area there. It lines up with there. And it also coincides with the blue line of the alligator. Okay. Now, the last thing about this move is going to be our Fibonacci level. So if you look, the 61.8, so between the 50 and the 61.8, which is normally the area you're looking for to continue on a trend. So pull back to this area before another move down. And that's kind of what I'm expecting. So right now I'm expecting this to more than likely play out, come up to this area here before the sellers step in again and drive the stock down some more. And we've had a high, we've had a lower high, we had a low, we've created a lower low now. So for all intents and purposes, we have created sort of a trend. You've got one high, two highs, and two lows. And if we just do that, let's get rid of this. Okay, now you can see between this green line and this downward orange line here, we have a channel forming, a downward channel forming. So the big question is, what is going to happen here? So yeah, so I think for me, I'd be quite willing to take a long here, and just take a long from. Let's see what happens on Monday, but it's worth a. You're going to have a $3.47 stop loss essentially, so you're going to have a stop below these tails here, and you're first going to look for a hit to there, which is $2.50, and then if that breaks, hold for a $7.80 target here. So that's kind of what I'm looking for on Apple next week. Hope that helps you, and I'll catch you later.